Good afternoon, everyone. We're finally in earnings season, which means we can start to take advantage of moves into earnings for certain stocks that have some interesting tendencies. Some of the stocks we'll take a look at in today's video include Boeing, which is reporting earnings next Wednesday, and this is before market open. Another one that we'll be taking a look at from the list of Wednesday is Qualcomm. Outside of that, from Tuesday's earnings, so this is July 26th, next Tuesday, a week from now, there's Coca-Cola, which also stands out. I'll share that, along with Microsoft, which is after market closes. So 4 different stocks, but for those of you that are interested in repeating this process for all of the different tickers that we have, not only next week, but almost every single day now that we're in earnings season, the tool I'm going to be using is our pre-earnings analysis indicator. You can download it for free for all Volatility Box members at our URL, tosindicators.com/indicator/pre-earnings, and there you can watch the tutorial along with download the actual indicator to get an idea of what tends to happen in your favorite tickers. Now let's start first with Microsoft here. Microsoft, 5 days into earnings is what I've set this label to. If I show you the settings, I have it set to 5 pre-earnings days, and then to show chart bubbles. The overall idea to point out is Microsoft tends to rise into earnings. That happens more often than not, 60% of the time. And in terms of the implied volatility, that implied volatility tends to rise 75% of the time. So that would be the combination that I'm focusing in on. Microsoft tends to rise headed into earnings, and the volatility increases, which means we'd like to be a buyer of premium, ideally something like long calls. Now the trick here is earnings is July 26th, so if we come inside of our options chain, you really have this week's expiration, but that really only gives you 3 days to play this, which means next week's expiration, the 29th, is the better options chain expiry that I would use to take advantage of this move, making sure to get out before earnings. So that's Microsoft. Tendency is rises into earnings along with implied volatility rising. Now, to contrast that with something where it's the exact opposite, implied volatility goes down and the stock tends to fall, is Boeing. First, let me share the labels, and then I'll also share why technicals support this idea. Inside of Boeing, Boeing tends to fall about 65% of the time, and this is going back 5 years. So over the past 5-year period, tends to fall into earnings about 65% of the time, and implied volatility tends to also fall about 75% of the time. So this is the opposite combination to Microsoft here. Also, if I zoom out in Boeing, we're towards the top of this channel, this overall larger decline, headed into earnings. So that would support the idea of looking for that to act as resistance, and Boeing starts to fall from this region. In terms of ways to play this, the fact that implied volatility tends to fall implies that you'd like to be a seller of premium. And since, again, we're looking on the bearish side, something that makes sense here would be selling a call credit spread, or some idea in which volatility is skewed in your favor where you're a seller of that volatility. So that's Boeing for me. Then next up, we have Coca-Cola. If we take a look at Coca-Cola, we're smack dab in the middle of this overall larger channel. Inside of there, Coke tends to rise 75% of the time, but implied volatility tends to fall about 95% of the time. So another interesting combination here, where I think the way to play this would again be a seller of premium in which you have a long bias. So something like selling puts inside of Coca-Cola, maybe where you'd like to get assigned. The one that stood out here was something like the 60 put. There's not that much juice inside of that strike, only about 40 cents or so, but there is more open interest. So that's a reason why that one stands out. 60 would put Coke right around previous support. So that's one idea for those who are looking to play this overall bullish bias. And then finally, we'll take a look at Qualcomm here. Qualcomm, 5 days into earnings, tends to rise about 70% of the time. And in terms of implied volatility, that also tends to rise. So similar to Microsoft, we have the tech stock phenomenon. The one thing to point out is never has this been tested in this 5-year period on a bear market. So there, we're still optimistic that the tendencies that have come to happen over the past 5 years will continue to repeat themselves. So that is one major assumption we make. So for the tech stocks, we had implied volatility rises and price rises. We also had Coke, which looked interesting from the idea of being long, but being a seller of premium. And then finally, we had Boeing, which to me is the most attractive one out of the bunch, mostly because we're in this channel where we'd be looking to get short anyways. Earnings is adding on to that tendency or the pattern, and we have some really nice ways to play it, with implied volatility very clearly having a tendency to fall into earnings. I hope you found this video to be useful. Again, you can test all of the different stocks or companies reporting earnings over really this entire earnings season by taking a look at something like either Earnings Whisper or directly scanning inside of the Thinkorswim Scan tab. Once you have a list of those tickers, you can then apply the pre-earnings analysis for the actual stock. One other thing I'll point out, we also have the Smarter Earnings indicator, which allows you to play the actual day of earning, and that would give you the full picture in terms of what tends to happen on the actual day. So for those looking to play that, something like Netflix for tomorrow, this would be the indicator to use, and I'll leave a link to another video that walks through how to use this indicator in detail. All right, I hope you found this video useful. Take care, everyone. Good luck trading this earnings season, and I'll see you in the next update.